All right, in this video, I'm going to be giving you a very simple way to establish a daily bias. What I'm sharing right here can be used with Forex. It can be used as futures, indexes. It doesn't matter. It's the same thing, guys. Price is price. You can use this in any market, okay? Stocks, you name it, right? So we're going to use NASDAQ right here. And I'm just going to use this for an example. So number one, when you're establishing a daily bias, and again, like this isn't the only way to go about doing it, of course, but my objective here is to give you like the simplest way to do it that kind of like removes the thinking. It removes the thinking, it removes the head scratching. It is just right here. You do this, done with. It's that simple. It's that quick to establish the bias, to establish a daily bias. So here's what you want to do. When you're and I actually do have a video on daily bias. I'll actually link that in the video description, the video that I made on daily bias a long time ago. Now this isn't the exact same thing, okay? That video I made on daily bias a long time ago, that one was, I mean, you could use that, but especially if you're trading futures, well then I understand like that video, you may be waiting a while, right? Because that video was more tailored to like my old trading style, my old strategy with Forex that I use. I'm sure you're aware of that. I traded last year, and you can use it with, other stuff, of course, completely. But I'm going to give you a different way to go about doing this that's still effective, and it'll give you a little bit more trading opportunities as well. Okay. You won't be sitting on the sidelines as much. That everything I talked about in that video that I made was completely valid. It's all good. It's all fine and dandy, but this, like doing it like this, will give you more trading opportunities. You won't be sitting on the sidelines quite as much. So here's my advice, guys. So it's very similar. Whenever you put in a swing low on the daily chart, for example, let's say NASDAQ, right here, we put in a swing low in NASDAQ. You can see how we have our lowest low in the middle right here. We have a higher low on the left. And then we have a higher low on the right that was formed right here. See that? That is what we call a swing low right there. As soon as you see a swing low put in, and the candle needs to close, by the way, okay, it needs to completely close, and you come into a new day. So we're about this close right here on Thursday, and now we're coming into Friday, and you have the confirmed swing low put in. Coming into Friday, your bias is now going to be bullish. Right away, you've established that. It was that simple. It was that quick. It was that simple. You established a bias right away coming to Friday that your bias is going to be bullish because it's got a swing low put in. And your bias is going to remain bullish until a swing high is put in. Now, this isn't the only thing. We're going to be talking about a few other things as well. Because, for example, sometimes, all right, let's start here first, though. So we got the daily swing low put in. We've already established that, right? And we're coming to Friday. Let me fast forward to Friday here, as you can see. We're coming to Friday, and you already know right away that you're going to be looking for bullish opportunities. Now, another thing that you want to confirm is that the market structure is aligned with the swing point as well. What do I mean by that? Well, we just confirmed a second ago that we got the daily swing low put in, which is a bullish signature, of course. But we also want to confirm that the 4-hour market structure is bullish as well. Okay? And this comes back to just, understanding market structure. You got to understand market structure to tell that. And so what I'll do here is I will leave another link in the video description to my entire playlist on market structure. I have an entire playlist going over market structure, everything you need to know in regards to market structure and knowing if something's in a bullish market structure or a bearish market structure. After this video, watch that one or watch that entire series as well if you don't understand market structure. If you do, well, then you know what I'm talking about here, right? So you want to make sure that you have the 4-hour bullish market structure here. You want to make sure the 4-hour market structure is bullish when you got that swing low put in as well. It is. Or we had that big surge up. We've had this. It's switched to bullish at this point. We're pushing up. It's got a lot of conviction right here. It's ramping up. Look how strong it is. Look at how these candles are printing. Look at all that strength that it has going towards it. So we've confirmed that the daily swing low is put in. This is that, essentially that third candle right here on just displayed on the 4-hour chart. We have that bullish momentum towards it. Okay. Now, if this was like weak and it was still bearish market structure, like say, because sometimes you'll have a case like that, you'll have the swing low put in, but the market structure will still technically be bearish in that. So what do you do in that case? Well, you want the market structure aligned. You want the market structure aligned. So you want to be patient, of course, right? So we got the swing low, check. We got the 4-hour that's bullish, check. We're coming to Friday now, right away, guys. We have that bias to go with. It's that simple. I've already established it. Okay. Are you going to have a scenario like this at times where you're going to have that daily swing low put in, and you're going to have this and again, guys, it's not just for the daily swing low. Your bias is going to remain bullish day after day until you get a swing high put in. So you'll be able to capitalize on several days after the swing low is put in as well. Because the swing low, in simplest terms, mean price is finding its bottom and it's starting to curl up. It's getting essentially momentum towards it on the daily chart. So you're essentially just piggybacking that momentum that the daily has set. Think of it like that. You're just piggybacking that momentum until the momentum ends. And when that momentum ends is whenever the swing high is put in. Is that always the case? No, it's not always the case. Sometimes you'll have the swing high put in and then it'll immediately ramp back up, right? Depending on what the market structure is on the higher time frame chart. Okay. But this is like a very simple way to go about establishing that bias. You get the swing low, boom. You got the 4 hour, boom. It's bullish. So right away we come into Friday here, right? And we already know that we're looking for bullish opportunities today. So what happens here on this Friday, on this particular day? So we end up selling, or we end up pushing up here throughout London, right? Then we come into New York. This is when we start hunting. Okay. Now this is another thing you can do. Again, it comes back to market structure. It comes back to having a firm understanding of market structure. Okay. We can see right here, we also have the 1 hour market structure that's bullish. Another very simple way, because like say you only trade New York session, a little tip from a New York session trader, which if you're trading futures, then now this is applicable. You can use the tips I'm giving you right now with Forex as well, like the swing low, the market structure, all that's fine and dandy. But let's say you're coming to New York here, right? And we have this market structure that's still bullish. Look at this. It's putting in higher low, higher low. It's consistently pushing up here. And remember, you've already established that you're going to be looking for bullish scenarios. And now we're coming to New York. You just do your simple, what you do, whatever your strategy is. Like you can see right here, we came down to this bullish order block right here in New York. Look at that pullback. Discount marketplace right here. See that? Fibonacci from that low to that high. It pulled back below 50% equilibrium. And then you just play the price action just in front of you. You've already established that you're not looking for any shorts if you have this criteria outlined. If you have the swing low, if you got the 4 hour bullish, you got the higher time frame tide flowing to the upside. You got the higher time frame trend backing you. And then of course, if you want to, which is best, is to have multi-time frame alignment, have the 4 hour, the 1 hour, all that stuff aligned. You can see right here, you got the 1 hour chart that's bullish as well. So you got that aligned with the 4 hour chart. That's best. Then you can utilize the 1 hour chart and make sure you're trading with the 1 hour trend as well. Okay. This is a very simple way to just always be trading with the trend too. You have that daily swing point, you have the 4 hour, and then you can utilize the 1 hour chart here as well. And you can, utilize that market structure to make sure that you are actually aligned with the trend. Make sure you're trading with the trend and you're not fighting it. And then of course you can utilize your lower time frame chart, and that's where you can get your entries, get all that good stuff. But I'm not gonna get too deep into like all the lower time frame stuff, because this video is mainly about just how to form the bias and all the lower time frame stuff. Like a lot of us, we got different strategies, different ways of doing things, but I'm just giving you like a very simple way. So like, for example, we did that on Friday. You'd be looking for bullish opportunities on Friday. What about on the next day? What about coming into Monday, guys? That was Friday. What about Monday? What are we looking for? Our bias is still bullish. Why is our bias still bullish coming into Monday at this point? Is there a swing high put in yet? No. Market structure on the 4 hour chart, it's still bullish, right? It absolutely is. It's just seeing a pullback at the moment. So guess what? It's that simple. Your bias is bullish. Now, guys, don't get too caught, because guess what? Sometimes it's going to turn. Your bias is going to be wrong. It's going to turn on you. Then you're going to get caught in that swing high. The swing high is going to form on the day that you are looking for bullish opportunities. You're going to get the bias wrong. What do we do in that scenario, Mike? Well, guess what? You're just wrong. I know. Sometimes you're going to be wrong. That's a part of trading. You got to accept it. You can't get around it. What is an edge? An edge is whenever you have one scenario that is more likely to occur over another. And guess what? Whenever you wait for this swing low, whenever you wait for this bullish market structure on the 4 hour chart, and you are simply piggybacking that trend, you're going to capitalize on that momentum more times than not. You're going to be on the right side more times than not. That's all you need. Yes, there should be some days in there where you're going to be incorrect. You're going to have the bias incorrect. Every system has sometimes, is incorrect sometimes. But this is such a stupidly simple way to just be aligned with that trend. It completely removes the thinking. You got the swing point, you do, boom. You get the 4 hour back, and you 4 hour market structure back, and you boom. And you stay with that until you have that swing high and the bearish market structure as well on the 4 hour chart. Okay. So you can see right here, we're coming into Monday, and guess what? It is bullish. You can see it's bullish market structure here. The 4 hours bullish, and then go to the 1 hour chart. And then this is where you can just utilize multi-time frame alignment, which I have taught in the market structure series. Okay. And look right here, coming into New York, we have sell side liquidity right here while it was operating a bullish market structure. Look right here. It comes down in New York and attacks this 1 hour sell side. May I remind you The daily is still in that upswing. The 4-hour market structure is bullish. And at the time, the 1-hour market structure right here, bullish as well. And it took out sell side. And then you can see how you can kind of dial it in, and you can utilize multiple time frames to get an entry. Look at that. Look at that big bounce. There's opportunity in there. And that could just be your one and done trade. You're done. Your bias was bullish. You got a nice buying opportunity on that little retracement right there. As you can see, look at that. Nice little displacement right there on the 1 minute. Comes down, pulls back into the imbalance, finds support, ramps up, and attacks the opposing buy side. Trade opportunity. Your bias was bullish. You framed it already. You already knew exactly before you did anything coming into the day. You knew exactly whether you're going to be buying or selling. And then you simply traded with that trend. Made sure the 4-hour trend was bullish. Boom. Then, of course, your best bet, wait on the 1-hour trend as well. Look for that multi-time frame alignment. Bullish. Boom. All right. And then you simply will trade whatever your strategy is. Right. And that's how you do it, guys. It's really, and then guess what? Say you racked in a win, right? You got a nice opportunity right there. You made some money. Cool. What about the next day? What's your bias? What's your bias on coming into Tuesday? Your bias is still bullish. Do you got to swing high? Nope. Because here's the deal. Whatever price is doing this, it's so objective. It's so objective is to continuously tag out previous day's highs. That's its objective. It's to continuously tag out previous day's highs, buy side liquidity when it's operating in this like uptrend like you're seeing right here on the daily chart. Okay? That's its objective. So that is what you're looking to, you're always, even if previous day's highs is taken, of course, like say it does it in London, you can still look for bullish opportunities in New York. That's how you would do it. Again, that doesn't change until you get the swing high put in on the market structure bearish. So you can see coming to Tuesday, guess what? Look what you got here. Market structure still bullish. Okay, this is just, we can see right here, yeah, the 4-hour had a little stop run, but that's all that is. As I've taught you what a stop run and what a market structure shift looks like. You can, if you've studied my material, guess what? You know that this is just a simple stop run. Look at that. This is a simple stop run on higher time frame sell stops. Again, we confirm that there's no daily swing high put in. We confirm that the 4-hour market structure is bullish. We see this stop run right here. And there's opportunity in that. You literally, of course, if you trade, where's that at? Yep, into New York session, we got that opportunity. See that? You're only looking for buying opportunities on Tuesday because the daily swing points put in. There's no swing high. The 4-hour market structure is bullish. You have the trend backing you here, and then you're simply just trading your system, whatever that is, and you're looking for bullish opportunities. And then you can see price comes up, and then it draws up higher, as you can see. And it takes out previous day's highs, which is what that draw on liquidity was, because that's its objective. That's what it wants to do. Each and every single day, this is what you do. And then look, still got, oh, and actually, this is a good lesson right here, because you might see, look at this. We have a swing high put in, right? So would the bias go to bearish at this point? Since we have our highs on the middle right here, we have a lower high on the left, lower high on the right. So our bias would be bearish now, right? Nope. What did I just tell you? Coming into Wednesday, let's go back to the 4-hour chart now. Is the market structure bearish here? It's not. And actually it did take it out. I think that's just because how the TradingView settings are put here. It actually did take it out. It actually did take that out because that's just kind of how the TradingView has it set up. I go off midnight. My advice, go off midnight. Okay, because you can see something like that. I see it on the chart right here and how you got the highs in the middle, lower high, and left and right. But if you go off the chart and you go off midnight, it's not confirmed anyway. But even if it was, like just imagine with me for a second that this was confirmed and this closed at midnight, right? We have our highs on the middle, lower high, left, lower high, on the right. Would it still be valid though, even if you like had it close at midnight like that? No, it'd still be bullish. Do you see bearish market structure on here? On this 4-hour chart. That's what you got to implement as well, because you'll have those cases where it'll kind of contradict. You'll have the swing high, but then it'll be bullish, right? So what do you do in an instance like that? You refer to the 1-hour or to the 4-hour chart. You want the market structure. Is the market structure bearish? Then boom, you can switch. Or if you want to, this is really up to you, because you can see obviously, I mean, the overall higher time frame market structure here on NASDAQ right now is bullish. This is a bullish trend, guys. I mean, clearly, it doesn't take a rocket science to see that this thing is overall bullish. So on the days, this is also an option for you. I'm giving you this option if you want to really exercise patience and wait for the highest quality setups. On days where you have the swing high put in and you have the 4-hour market structure bearish, you can literally just sit out. There's nothing wrong with that. You can literally just sit out and not take any trades and wait. I'm telling you to just wait, exercise patience, and wait for the swing low to get put in again, and then wait for the market structure to be bullish again, and then just simply ride that wave back up. Literally just ride that way back up until it bends again. Like, look at all the opportunities in here. That would actually probably be the smartest decision, considering that overall it's bullish, right? or when the daily market structure is bullish, you can always stay aligned with the trend. And then when the daily market structure switches to bearish, and again, I have videos on that entire market structure series on how to tell that, well, then you can only trade the bearish trend. And then whenever you get a swing low put in, you can just sit on the sidelines. But right now it's bullish. Its market structure is completely bullish here. And look at this. Look at all this opportunity that you got in here. Swing low right there. Boom. Pushing up, pushing up, pushing up. And it's like, this is all opportunity in here. That's all opportunity on that upswing. And then, of course, once it gets a swing high, put in the market structure shifts, you just simply go to cash. You sit on the sidelines. You protect your capital. You protect your capital for whenever the daily chart is supporting you, whenever you got that 4-hour market structure backing you, when you have that multi-time frame alignment for the highest probability conditions. Okay, and you stay with this again until you get to swing high. So boom, that's another day of opportunity right there that you got to make money. All right, it's pushing up 4 hours bullish. You'd look for buying opportunities in there on that day, and it does that until you get the until you get the swing high. Look right here, and that's where we are actually right now. And we just recently got that swing high put in right there. You get that swing high, and guess what? Let's go back to the 4 hour. Now you would go to cash, or now you could actually, again, this is your option. I'm going to leave this up to you. If you just want to stay overall aligned with the overall market structure, you just want to only look for bullish opportunities, you can just go to cash and wait for the swing low to put in again, and then look for that bullish continuation to the upside. Or you could switch to shorts on this particular day. Now that you got the swing high, and now you have that signature, you have the market structure backing you, it's had that bearish shift, you can now at this point switch to looking for shorts. Because the momentum, think of it like the momentum has switched. So you can see Friday, even though Friday we did get a nice long opportunity. And if you're going to do it like this, guys, you're going to have to accept that you're going to miss some opportunities. Because I was talking about this with my mentees on Friday, and it gave a really nice long opportunity in the 1 hour discount right here. Because you can see actually we had London set the trend bullish on Friday, and it gave a nice push up. But what about the daily? What about the 4 hour, right? It's bearish. Well, then in a scenario like this, there's still opportunity in there. Like, for example, as I was telling my mentees, once it does come up and it takes out this buy side right here, well, guess what, guys? You're in a 4 hour premium at that point. You're taking out buy side at that point, and there's opportunity in there to make money. You just got to be patient, of course. If you're doing it like this and you're staying strict with this as your rules, then you're going to miss some plays. But that's with everything. You're going to miss some opportunities. You're going to miss some bullish opportunities like you would have right here. But then it came up, it took out this buy side, and then guess what? There's your short. Look at that reversal. Look at that big reversal. There's opportunity in there to make money. And because if you're utilizing these rules, you're utilizing the daily chart, the 4 hour chart, and you were patient to wait for this move right here, then boom, you got paid. It doesn't matter, even if you missed this big push up right here, you would have cut the reversal later off the buy side, right? And again, you have that outlook coming to the day. That daily chart, that 4 hour chart, it gave you that outlook. You already knew what you were going to be hunting for coming to the day. You already knew that. There was no thinking. There was no head scratching. Just by utilizing the daily swing points, the 4 hour market structure, you're golden. It's that simple. And it keeps you with that daily momentum. Okay. So I think that about covers this video. I just wanted to make that because I know this is something that a lot of people struggle with. Is this the only way to go about establishing the daily bias? Nope, it's not. But in my opinion, it's the simplest. It's the easiest way to go about doing it. And yep. So if you enjoyed this video, leave a like, subscribe to the channel. I will catch you later.